Welcome to the Golden Chair, a place where we are mining gold. What is gold? Gold is money. We're looking at various opportunities where, as Black people, the various spaces where we can play. I mean, generally, as a Black person, we generally known to focus on one sector, which is the public sector or the government sector. So through the Golden Chair, as you would notice, a few weeks ago, we spoke to Ubabo Zongo, Sandile Zongo, who gave us various opportunities, manufacturing sector and various other sectors. And then we spoke to Ubaba Umbata, Sibonelo Umbata, fuel retail sector. Last week, we spoke to Ipeleng Mkari, who spoke about the opportunities in the property sector. Now, this week, we are meeting a dear sister, Kgaogelo, who is also going to take us through the interesting area, the interesting sector of property development. As we heard last week, the property development sector is a 5.7 to 5.9 billion rand, 6 trillion rand sort of sector. So it's a huge sector, and we need more Black players to play in that space. Which is why we then invited our sister, Kgaogelo, who is going to take us through her journey in the sector, having worked for Liberty Life, Stanley, and now Emerging African Property Holdings and various other areas, in the sector. She's well known. Welcome to the Golden Chair, my dear sister, Kgaogelo.
Thank you, Tate Kombule, and thanks so much for inviting me on this very important show. I'm definitely loving the work you are doing, and I'm honored to be your guest.
Thank you. Now let's get to the gist of it. Our viewers would like to apologize for yesterday. Tonight, we are going to give you a creme de la creme, the quality that the industry can ever offer. She's got about 19 years experience, almost 20 years experience in the asset management, property asset management space. So she will be sharing that wealth of experience with us because there's someone out there who's saying, I want to enter into the property space. It could be residential, it could be commercial, it could be industrial, retail, or any other sector within the property sector. Today, we are going to give you as much information as possible. Please leave your comments at the bottom so that we can continue to engage you as we continue to speak to Kgaogelo. Now, Kgaogelo, take us through the journey, this 19 years experience or 19-year journey in such a very interesting white male-dominated sector. It's not a very easy sector, but you've done very well. And here you are. So we are so honored to host you. Take us through this amazing journey.
Thanks, Tlantla. So I actually studied. I initially studied BSc General at Wits, University of the Witwatersrand, and my second year I failed dismally because it just wasn't for me. I didn't even make the effort. I didn't understand why I was in a lab. Possibly now you could say it makes sense because now we've got interesting technology in biochemistry and all those places. But back then, it didn't make sense to me. My parents being doctors, there was also some expectations. I thought people thought I should be one myself. So I took that route. But then went to study town planning after my failure with the first attempt because it was easy to get into. I think they were looking for people, and it was possibly the only one that didn't have long queues. And I was like, I've seen town planners walking around campus doing nice things, looking through stuff. I don't know. And I'm like, let me try this. I need to get a degree. That's all I knew.
Right.
It was a 4-year degree. And in my 4th year, with an honors, one of my lecturers, so we did have a property course in our 3rd year, which I was quite fascinated with. I've always been interested in cities. So I thought that the property angle of it than the town planning one was actually much more intriguing. And by luck, you speak to the universe, you somehow call on it. One of my lecturers in my 4th year said, look, there's a company called Verily Consulting and they're looking for somebody like you. I didn't even think he liked me, to be honest. Those lecturers you think, I don't know if he likes me much, but clearly when they asked him for a referral, he looked at me and thought I would be the one. So I spent the first 5.5, 6 years of my life as a researcher with a property economics consulting company.
Okay.
And some of our clients were the big investment firms as well. So we'd go and do presentations about the market, do feasibility studies for public sector. It was quite intense. So it gave me a bit of an overview in terms of who's playing, who's doing what are funds, what are they doing. And then I was then moved to a company, also research, started with a company called Investment Property Data Bank, which was a UK-based research benchmarking, which benchmarked the different funds or property funds in terms of performance. And at that time, you had funds like Liberty. You were just starting to see. You just started to see the listed sector, which we now call the real estate investment trust, which I'll talk about later.
That's right.
And so I got to see how different funds were performing, what does income returns and what do returns mean, what do they look at. And then I was then called to Liberty to work in the asset management division. And at that time, Liberty was rolling out about a 3.5 billion development pipeline, which included the first phase of the extension of Sandton City at the time, which created the loop from Woolies to Edgar's on the side, included the Zaras of the likes, the incoming project as tenants. You had, it was quite an exciting time. We're talking about quite a 1.7 billion rands worth of an extension. So you can imagine my first time in doing asset management, and we were going through such a journey, putting the investment paper together, setting up investment committees. And then there was also an Eastgate extension as well, which was bringing in some reconfiguration, a new the restaurant outside at the roof, changing with the cinemas, and then we also extended in Mitchell's Plain, Liberty Promenade, which was actually at the time our only sort of so-called township shopping center, which had very different dynamics from your other metropolitan ones. And even now, I'll tell you with COVID, how some of those centers are behaving differently with the impact. And then we also had Liberty Midlands Mall, and then we built some hotel. One hotel was being built and 2 offices. So, and then the portfolio was also quite a variety of one. It had hotels, offices, and retail. So I think it still is one of the larger retail malls in South Africa. And then Nelson Mandela Square was the other asset, although its development came afterwards, just before I left. So you could say then, we also got involved with the Diamond Walk when that came through Sandton Sun Revamp. So it was really a blessing to be starting investments where there was also live projects and with that size of a project. So it got me exposed to development in terms of then from the client side and how it all works. We had development managers. I didn't have to fulfill that role, but definitely as the client, I had to have those monthly meetings, look at the returns, the project, how it's going. So I'll take you through that later.
Wow.
And then we moved to Stanlib. And at Stanlib, so the group moved to Stanlib from Liberty, the asset management side. The property management and development remained at Liberty.
Right.
At Stanlib, what was interesting then, because now Liberty was a life fund where the property investment and management happened within the life environment. So Stanlib was the asset manager of the group, the subsidiary. Right. So the asset manager by nature is that they provide returns for capital. The capital market. So they take people's money and put into different products, unit trusts and all those things. So when I got there, I got exposed to how money was collected from the institutions or individuals like us, so we could see at play. And also, I then also went into a start of a private equity fund, which was focused on the rest of the continent in terms of mostly retail. So it got me to travel to Ghana, Nigeria, and then the east to Uganda and Kenya. It was intense, but at least I got to know that experience as well. So by the time I left in 2015, I can't say I knew anything much about going to collect money. But I sort of went through a journey where I tried different ways of trying to have a fund, get money from whoever the partner is, any institution as individuals. And one thing I realized for sure is that you can't go with a blank paper and expect to get money from anybody. So luckily, I was in an investment which had matured, and instead of paying myself and going to buy a big mansion in nice sports car and fancy clothes, and I was like, this is an opportunity for me and the guys who will be remaining in this investment to form a company, and we can grow it. And it's now what you see is as a majority black woman. It does have males. It's got not a lot too. And then there's a white female as well, but we are definitely majority. And with that, we're able to do a transaction, and then look at getting partners for us to deploy our money, and that's where we are. So then this one got me involved in the industrial space. I also sit as an investment committee member for a fund called Summit Africa, whose focus is on real estate with schools and hospitals. I know you've got schools, Tlantla, so and we had a bit of a chat about it. It's something that I'd like to introduce you to going forward. So that was like another sector that I was involved in. And I've also, with a couple of people, bought a piece of land, and we putting together an affordable housing scheme. Now, that is like, personally, people get putting their money in. But one thing I'll tell you about it is that you cannot go into something without having what they call skin in the game.
Skin in the game, yeah.
So this is like, you can't just come with nothing and expect something. Either you must come with a piece of land and contribute some extra equity for that to get funded, but you have to have something that's gonna put you above the rest, or actually succeed. So I know we're frustrated. Unfortunately, as Black people, we don't have trust. We don't have fathers with friends.
That's right.
With big pockets. It is what it is. It is what it is. But how do we then find a way to get to a position where, even if it's not you, but your future generation can be able to get those opportunities too? And I hope today I can share with you some of those things in my mind, which I think we can have the investment potentials, or how you can go about it.
That's right.
As well.
Wow. This is an amazing experience. Diverse portfolio from, Sandton to Pietermaritzburg, my hometown. That's where I grew up. Were you involved in Pietermaritzburg with the expansion of the Liberty Mall, or at the inception of the first?
Also the first time, because now it's been extended further. So this is like 2009 or so. So that I was involved in. I just left when the recent one.
Yeah. So it was the first expansion, the Edgar's wing.
Yeah.
The Edgar's wing, yeah. And you also had Mitchell's Plain, so it's quite a diverse experience. But what I like about the experience is that you started from the bottom, from market research, which most people don't really get exposure to. So you've got 5 years experience in market research, several experience in analysis, where you were analyzing the different funds, and then you grew to asset management now, and then collecting the money. And now you are on the other side in the property development space yourself, doing the actual.
And I like to correct a bit in terms of definition. And we from somebody who's not in the space calls it property development. And because we need to understand, it's actually, property development is just part of the value chain. There's property management, there's facilities management. But before all of that can happen, somebody needs to invest. An investor needs to be there who's got the money to say, developer, go develop for me. Property manager, I've got this building, go manage for me. You can play the role of all as an investor and have your value chain. But I think for me today, my focus is going to be on investing, how you can invest with limited money, and where you can go. And I'll also take you through what a development looks like from the onset too, so that you can see that it's quite a lot of things, but you don't have to be involved in something like that. There's options as well.
That's right. Well, let's get onto it. Maybe that should be our second question. Please leave your comments at the bottom. We'd like to hear from you. Kgaogelo wants to answer your questions. Please leave your comments. Keep commenting. Share share the page. Share the conversation. Now, take us through this journey. If someone was to invest in a particular asset, whether it's an office park, commercial or residential, what are the key things that one needs to look at?
Okay. You can hear me, right?
Yeah.
Okay. So I think the first thing, everybody's got different aspirations in terms of what they're looking for as an investor, right?
Yeah.
We don't have the same amount of money. We've got, but at the end of the day, investing is about wealth creation and wealth protection. So with a property, it's about an income stream that you get each month, which we can pay you dividends or some income returns, depending on how you structured. And there's also what you hope will be capital appreciation, the increase in the value of the property. So when you sell at the end or you whatever you do, you can get that as well. So there's a point where you'll exit or partially exit or not. But we know that what the challenge is. It's a large individual value. So to get access to the funding, yes, you may have a good project and take it to the bank, but you still need about, whether it's 30% of equity required, or it's 20 or it's 10, depending on the sector and the type. And like if I can think about it, where would you go and find, say, 2 million? Even 2 million, just like that, whether it's 2, whether it's 10, whether it's 50.
Yeah.
And of course, you need to go access the right opportunity. That market research, you don't buy land for the sake of buying it and say, I've got land.
Yeah.
I think the narrative must also, you're either going to live on it or you're going to do something about it.
Right.
It's also not liquid, the liquidity. So you can't just get money from the property or sell it same time. There's a period. And you got to think about that it's a journey that you have to be in it 5 to 10 years. It's not a quick thing. Whether you investing as an income producing or a development. Then also there are also two different things. Me personally, I prefer to, and a lot of the funds do that they will have, you'll find that majority of their money goes into income producing assets. So this is a asset that's already got tenants, it's already been built, and I'm just buying the leases and the building and all, and I get some returns. I basically pay off my debt if there's debt, and then after the debt, there's going to be then the profits that you get paid.
Right.
That becomes a bit cleaner. It won't give the high return as of the development, because there you do an upside to a property.
Yeah.
But either way, even when I've bought an income producing assets, before I get to a development, I still need to know that it's about active management throughout its life cycle before I sell it or redevelop and start again. So after you buy, you still have to do things to it. So for example, you're going to get a property manager who's going to come there and have to collect rents for you, do leases for you, lease agreements, finding the tenants, the maintenance, producing statements. There's going to be debt collections. There's going to be utilities, payment, recovery, the cleaning, the security. So it's, yes, you can pay somebody money to just do that, and you possibly will, but you need to know what's happening. There's going to be required maintenance and replacement throughout the lifestyle of that property. So I think one should always that, yes, you can get the property management company, but you yourself need to be familiar with what is happening, because it's your money, you're the landlord. So you can't just be sitting there and be idle about it. Somebody could also be cheating you. For example, somebody was like, somebody's collecting our rentals, and then next thing, we're not getting all our money because they're taking the rental. So instead of like you collecting 100% or 90%, 80%, it's like, no, but I'm collecting 30. But so if you're not there and understanding what you're doing, make sure. And what I'm liking about is that there are property education out there. There are organizations in the industry. You don't have to go to university, and now there's online short programs as well, between South African Institute of Black Property Practitioners, who started a property entrepreneurship program and management. There's SAPOA, there's Shopping Center Council. I think people must just put the time to take themselves through one of these programs.
That's right.
If you're gonna go into this space.
Yeah.
Right.
Okay.
So now I get to your interesting point about what happens then in a development from onset.
Yeah.
Right. What is this process? So you can access land via you go and buy it, or also things like governments may have land that they own, that they want to have something developed on it in partnership with you, where they can give you the long-term lease to go. And I mean, especially if you look at things like social housing and affordable housing, there is opportunities for government to make available to public to private sectors to develop to fulfill that function.
Right.
So I would then say, look, I mean, with the different and different sectors may have different requirements in terms of whether there's pre-let conditions before you get funding or something. For example, I'll give you an example. In terms of, let's say, a retail shopping center, I would go and possibly, people will go and look at a market and say, okay, this market says there's a 10,000 square required or 50,000 squares from a market research, which you're going to have to pay for, unfortunately. So there's going to be some, you're going to have to incur some pre-feasibility costs before you go.
That's correct.
And I would look at that and try and then speak to a national tenant, a ShopRite or whatever, who's going to anchor the tenant to say, look, this place needs this. Would you be interested? And you can speak to a couple of them.
Yeah.
They will then give you a letter of expressing interest or whatever. On the other hand, even with an office, unless you want to build speculative, I don't know why you'd want to do that. If you don't have money, you try and go find tenants who want to be in that area as well and entice them there. And so by the time you go to the bank with your feasibility or whatever, you've got some interest as well.
Yeah.
There are lease agreements, you can get into them later in the process. So there's going to be some money you're going to have to part with. So let's say now we found this piece of land, but at the same time, in, let's say, affordable housing, and I'm using an example of something I'm involved in, where you're not necessarily going to, they're not necessarily going to require you to provide the lease, the interest at hand, but there will be a point during the project, towards the end of the project, where you're going to have to market and get people in, so that you also, so they can give you, because remember as well, in South Africa, we've got a backlog in terms of providing housing at the lower end. And one thing I'll tell you, I mean, as you go higher, the market changes. There's too much supply. So you'll find that market, actually, it's a buyer's market right now, because values have declined. So there's a lot of stock in the millions plus and those fancy ones. But when you go to an income bracket of people earning between 3,000 to 22,000, for example, there is still demand. And some of them are being created via affordable housing or social housing, which are the different instruments, because government gives them a grant. But I'll talk about funding later. Yeah. So then we've done the market research. Then you need to find an architect and a quantity surveyor to cost a concept design for you. That's also costly. Yeah. If you're lucky, you know people, and they're like, no, we can work at risk with you until you can get the funding. Right. But we're not always lucky. Somebody will say, I still want something, because what if, whatever, you know. Sure. And then with that as well, remember there's also rates and taxes you're going to have to pay without getting any income. So there's a holding cost that's going to happen forever. So there's more cost. And then they will put a design, you will cost it, you will then make an assumptions from the market research. The market research must be independent, to be honest. You're going to try and make it independent. Who would have gone to source out what is the demand in that area in terms of the rentals payable, the QSing and all that will cost the development, because they've got the rates and use industry practices. Right. You will then also during that period, you sometimes also have to get engineers to look at your structural issues. There's surveying that needs to be done. There's a geotechnical report, which is quite expensive, that needs to be done. So, but the nice thing about it is that all these costs you're incurring, plus the land purchase, when you go and seek for funding, they will consider it as your equity contribution. So that 10% or 20% will include those initial costs. So by the time when you get to the funding, they'll be like, no, you've got a shortage of not the full 10%, it becomes 3%, because you've already accumulated that and you put it together and it becomes part of your cost. So they would look, they'll offset it, and you'll just do the difference, but you need to show that. Right. So let's say you are lucky, now you get funded. So you have to consider, I mean, that's just looking at those costs. Look, and we always say to people, I'm like, nothing is for free, unfortunately. We've got a past that's painful, but nothing is for free. So you have to put in some cash. I mean, there's sometimes there'll be institutions that want you to put in a percentage of the costs.
Yeah.
You have to put guarantees on your investments. And then also, one thing to think about is that if you're going to have partners, especially, it's better to house a property. It's in a company, right?
Yeah.
And if you're gonna have partners, instead of you guys buying individually, having on the title deed of the property, having Kgaogelo Mamabolo,
Yeah.
you know, Sunday, you can actually have a structure where you buy shares at the company level. You all owners, so the company will own the property.
Yeah.
Why I like that is because, and why company holding is because it makes easier for if somebody exits.
Yeah.
If somebody wants to exit or bring in new partners, you just change at the company registration and so I would suggest that. And then there's tax and others. Some people will come in with trust in that, so you can form yourself like that. So once then the bank they can come and say, no, it doesn't work, go back and do your homework, you know. And then so there's a full feasibility investment case, business case that you take to the banks. If you don't have relationships with the banks strongly, you can find people who've been able to access funding or know something and use them, but they'll charge you a fee as well. So there's a fee that gets charged for finding the senior lending. If you're also lucky, you can find those rich friends who've got excess money and bring them along to the development to come join you. So I think the collaboration becomes quite critical because we don't have the big money. That's how I actually work. I hardly have anything where I'm a single owner unless it's a flat or a house there and there. But if it's like a big investment. So with that, then you then have to get, well, in parallel to that, while you're getting the funding, you're going to have to get a few professionals now.
Yeah.
And now there'll be a project manager who's going to be there. You may have what you call a development manager, who possibly sits between the project and the client and looks at the investment and making sure that it still meet the fundamentals, the returns that you're supposed to get. Because the project manager mostly runs the project, runs the team, and manages the time, the risks, the on-site things required. But you still have your quantity surveyor there. There's civil engineers. There's you may have deployed a town planner at the time. Oh, by the way, there's another cost that you're going to have to incur, and that is to get first of all, you need to make sure that your property is zoned properly.
Yeah.
There's also what you called bulk services approval for municipality. This is for water and services, electricity for your site. You also have to do you must also go for a site development plan approval and building plans approval, and those come at a cost as well. But those costs could also be, if you have to do them before the funding, they'll be offset against that equity contribution, as I mentioned. And then you get your professional team. Depending on what you're building, you can build. It can be a 6-month or a 12-month, and the more complicated it is towards commercial, it can be 18, can be 2 years. So, but let me tell you something about property development. There's a study that was done at UCT. I used to sit on the research unit advisory board, and they did a study. They use Cape Town as a model, but I think it applies everywhere. That says, on average in South Africa, from when you see the opportunity and get the land to when you start building, it could be 6 to 8 years.
Yeah, that sounds like and it's a number of factors, but municipality approvals and all those things that they need to give you can actually also slow you down. Never mind that you need to find money and you need to go through the process of getting tenants, whatever. But that is a long time, and that's a lot of money. The rates and taxes you pay all the time. Yeah.
You know. So afterwards, then during the construction, there's a couple of things. Okay, then you have to go get a contractor as well. The contractor must be registered with the council, with what they call there's like regulation councils like the National Home Builders Registration Council, but they have to have for something called a CIBD that they must have, and then your professionals must have professional indemnities. There's going to be insurance, public liability covers there because you are building. You know, anything can happen. there is going to be orders. So during the period of construction, you're going to have to report to your quantity surveyor is going to have to put together the cost reports. You're going to then also to draw money from your investors. They're going to be a lot of paperwork that mean that they require. I can't go to the details, but when you get your term sheets, they'll give you those requirements. And then towards the end, then now you must also then start thinking about your property management and your, if you haven't leased yet, it's in parallel now towards that, because now you've got a product to show. So when you finish building, then there's a couple of things that will be required, like occupation certificates, fire and safety compliance certificates, electrical compliance certificates. I'm sure people are familiar with that. And some insurance as well. And sorry, my screen just fell a bit. And all those other approvals as well. And then we are done with the projects, and then you can hand over to your tenants. Now, sometimes, and I'm going to use offices and industrial, if let's say you have one tenant, it's very possible in a building, it's very possible to get into agreement where they call it a triple net lease or a net lease, where the tenant will take care of the property management, and all you taking care of is the rates and taxes and maybe the insurance. So they pay you one bill, they do the property management. You then, your focus is to make sure that the financing and all those things, the payments happen, and then you will also then most times be liable for the capital expenditure. For example, air conditioning, it's the landlord's cost, and so that's called the net lease or triple net leases. But where you do have multi-tenants, it becomes impossible to implement that. It's a gross lease, what they call a gross lease. So you'll be liable. They'll pay you a rental, but you'll be liable for the operating cost payments in your bill, which includes some of those things I mentioned, like the rental collections, the cleaning, the security, the maintenance, whoever produces the statements. So you'll be liable for such things. So that's the two differences as well. And then so and then hopefully in no time your debt is paid off and you start receiving your dividends, or maybe even take this property and say, hey, I'm gonna build another one or whatever, and expand.
Let's get to,
so I think before, or maybe I'll get into it when I speak on the REIT side, but let me wait for your question.
Okay, no, I wanna so now I want us to go back and say, from your planning, you've got a piece of property, it's 5 hectares, you bought it, it's zoned agriculture, and so you've got to start from rezoning the property all the way to EIA and the planning approvals, and getting all those planning approvals in place. Say typically that will take 3 years before you even do a sort turning. That's a 3-year period. I just want the viewers to understand that it's not a quick, easy. In the meantime, you're still paying your rates, to the municipality, because you own the land. You still have to pay the professionals to prepare, to do all the planning approvals, to make sure that they are all in place, to rezone, to subdivide if there is a subdivision required for whatever reason, and getting the bulk services, getting the internal services in place before you even play the first break. So I want the viewers to understand it's not a quick process. It's not an in and out process. Before you even lay the first break, the foundation, it might take you a minimum of 3 years, depending on the planning approvals. However, if the planning approvals are already in place, it might be slightly quicker to prepare. Okay, then you get to construction, which might take a year or two, depending on the type of a property and the size, of course, etc., etc. And then you get to implementation. So you're looking at a minimum of, as we were saying, 5 to 7 years before you even implement, before you even give all the tenants, before the full occupation is in place. So I want you, the viewers, to understand, when you start, if you want to get into the property development space, it's not a quick and easy thing. It's something that takes time. You've got to be patient, and you must have patient money. Don't expect to make money overnight and become rich overnight. Okay. Now, so I want us to get to the next question, KG, and say, now you've repaid the loan. It's, let's say the tenure, the term loan was, like 10 years. So from the beginning to the end, it's 15 years, okay? You are 35, you are now 50 years. You're now faced with the decision of whether, here is a property, it was 10 million rands, 10 years ago when I started paying it off. Now the capital appreciation is worth, I've repaid it, it's what now worth, just picking a number, worth 20 million rands. What do you
Sure.
do? What options have you got?
So, and let me just go into before I answer that, right? I'm just going to give you a picture in terms of which institutions actually invest in property in South Africa, because I think that's one of the answers would be quite critical for you to. So you've got private funds, whether it's through it's me who just has a couple of a portfolio and my friends or whoever, my business colleagues, and then you've got the real estate investment trusts, which are the listed, the big sector, the growth points, the refines, the listed ones. And then you've got other listed property companies. Some of them may focus, so the REITs focus on income producing assets. So it's not, they will have developments, but their main focus would be majority. Then you've got other listed property companies like who would go for developments. So they at a development play. And then those are the kind of companies who are linked to your question. What do they do with the assets after the 10 years or whatever you invested in, right? Financial institutions sometimes may partner with you. So they may decide, okay, you building this nice big industrial park, we like it. They can become your equity partner and maybe do that shortfall I was talking about. They could take a view on you and say, no, we'll put in this to help you. So we won't just become a senior lender, but we'll also then co-invest with you to help you with the shortfall.
Right.
There's some people, the lucky people who get those structures, but it's also risky as well. Then you've got pension funds through asset managers would also get into property somehow. And then you've got what you call private equity funds. They're also structured differently. They're also longer term, how they pay out at the end. And then the Liberties back, or can I say old mutuals and their life insurance companies. So through your RAs and your other products that you buy there's a portion of them that goes into property. So an old mutual or the Liberty, that portfolio is because there's a split which go into equities and bonds and property and cash and whatever. So there's that. Government is a big player through whether it's municipality, with us in the industry, Department of Public Works becomes our main industry line ministry. They've been part of our property charter processes and the likes. And then of course you've got the state-owned entities. For example, Transnet, yes, they do property as well. The telecoms, the access, and there's a whole lot of other place there. And then the pension funds for those state-owned entities also invest money into property. So it's a wide range. So if I'm a developer and I want to exit, definitely if you've got a good asset that is backed by a good lease and you need the cash, these institutions, if it makes sense to them, they can take them up. Or you on sell to somebody else that who's interested, another individual. So it's not you don't go in knowing that you'll be able to sell it. But if you've got a solid investment, somebody can take it. Or sometimes it may be that somebody wants it to use it for something else. There's conversions, as you know. I'm just going to use the office sector, which is going through quite large vacancies because there's oversupply. And it's generally all over, except a few nodes there and there. So you see some places. I know in Sunny Hill there's some plans to do more conversions into residential, to flats and apartments. So, and in Sandton, in some areas where you know how Sandton, I don't know if you're familiar with Sandton, but everybody, all the big guys went to go to the Rivonia Road because of the hard trade, and now they left the lower part. So there's opportunities for conversions in such instances. So Yeah, so it's, and then also sometimes if your portfolio is big enough, maybe you and your friends got together, they did other assets, this one did other assets, and you put them together, you're like, okay, fine, maybe it's the number is enough for us to list it. What they call an IPO, you can exit in that way. So it's really the different ways. But I think if you wealth building and you think you're gonna live till 90, 80 and you still want to enjoy it, just keep it if it still works for you. And enjoy the dividends that comes from it.
Another thing, if you still have tenants, like say you had a single tenant, like you were saying earlier, you know, a good tenant, ShopRite industrial, it's an industrial park, it's a warehouse for ShopRite, and they still renewed their lease by another 15 years, and you want, but you still don't want to exit. So, and you still want to develop. So you can possibly use it as equity.
Redevelop.
You know,
you can redevelop, extend.
Use it for, as you know, you now have equity, because the challenge is always equity, but you now have an asset that is worth 20 million rands. You can take that asset and say, well, you know, go to the bank, find another asset, another piece of land or another brownfield asset and say, look, I want to buy this asset, it's worth 70 million rand, but guess what? This time around, I'm not coming with my hand in the cap, you know, with my cap in the hand. I already have a 20 million rand asset, which I will use as my 30%, you know, contribution and pull it into the pool. So instead of one asset, you now have two assets. Something like that, is it possible?
Yes, it is. I mean, that's if you know, and it's a conversation I was having recently. Is like, oh, once you get into this first one, it makes the second one easier because of exactly that. Because you can use, whether it's the board extensions or whether it's those, like I said, even those dividends, instead of paying yourself, like, I'm going to take some of this cash for my next investment and start again. And and also now the institutions look at you slightly differently. Maybe they gave you only debt for 55%. Now maybe they can say, okay, you've done something, track record, you will go to 65, you go to 70, you go to, you know. So but as I say, it's also, I mean, I'm looking at one of the slides I have, is that we have to realize that there's different elements that play in different sectors, right? You can imagine with COVID-19 now. It's had impact. The past, I mean, April alone was a mess. You know, people, because now the office tenants, some of the businesses had to close. Retailers have been hit. You can imagine now restaurants and the beauty salons and those are coming now. I mean, there was a time where in April only essential was open, so even clothing was gone. And now you have some people being scared to actually venture out into the shopping centers. Already before, we're seeing things where some big boxes were being impacted. I mean, remember Stanford closed. Edcon was a big anchor in shopping centers, and now it's also had its demise. Some of the international tenants who came here thought, they now realize they didn't do what it's not what they expected. So now they're also leaving. So it's been quite interesting. But I'll tell you now with the COVID is that the metropolitan. So in a cycle of South Africa, we've always had the big shopping centers quite resilient to lows in the market, lows in the economy, because property follows the economy. When the economy dunks, you must know something's going to happen to you somehow. So now with COVID is that convenient shopping centers close to you, they've been doing well because people are not wanting to go into a big mall. They're going to the strip mall across the road. And then, interesting enough, small towns and township centers, those has been, because you can imagine there, it's very basic. During the beginning of the month, when it's grant payments and SASSA, it's busy there. So they've been quite lucky in terms of the impact hasn't been that bad. And then from an industrial point of view, logistics generally has been fine because they provide essential services. Hotels have taken a beating. It's bad. I think with this, I also see that there's potential for more hospitals, because now we've seen that we're really under capacity as South Africa. I know that there was focus to issue hospital licenses to Black-owned or majority Black-owned companies. So there's a potential there as well. One sector that does nicely is storage. There's also a listed fund that focuses on storage as well. So it's also some of the sectors that are quite interesting from that perspective. So that's largely, and I talked about the residential area. But you know, to be honest, if me and you getting together, there's a chance of us being able to afford building housing than commercial, because commercial has got larger value. So now, how do I then get into commercial if I can't afford it to build it, right? And hence it gives me an opportunity to then get into what we called indirect investments in property. So you're not going to be direct landlord. You'll be a shareholder in something of some format without being directly involved in it. Because not all of us are landlords. Not all of us have got the time. Not all of us have got this thing. But we want, because investment is about wealth creation at the end of the day. Whether
but you want to get into the space.
Whether I put it into investment products or in a bank or a unit trust or buy on the listed sector. It's about wealth. You don't go into it because you want to become a landlord for the sake of it. No, don't ever do that. I know it's very, and because South Africa is very of where we come from, we're very passionate about this land conversation. But as we said earlier, you hold it, it costs you money. And you're not doing anything with it. So I would suggest that we have a mindset to say, when we do get it, and even if we get more than we need, what are you going to do about it? Whether it's building other people, whether it's donating for whatever is decided, but use it, don't keep it. And I think that part of the conversations that people are upset about is that you've got a minority of, and some people have got excess land they're doing nothing about. Hence, land grabs can happen sometimes, and it creates a debate that is uncomfortable all around, and people are pushing against each other. So if you have any question on the development side, before I get into how else to invest with our direct, please feel free. So
I think let's get into that one. You also were going to talk about the real estate investment trust as well. If you can just get into those instruments.
Okay, right. So I mentioned those institutions that also own property, and sometimes we mustn't forget that actually most of us are landlords without realizing we're landlord. It's just that we don't have a direct title deed, because as I said, through my RA, I mean, retirement annuity or life cover through a life fund such as Old Mutual, Liberty, and whatever, because I've got a portfolio, I'm actually a shareholder in it. So it's important that you don't just dismiss those things, because that's your money. Collectively, collective schemes, it goes there. All our monies go there. Then you've got your pension fund, a government pension fund or an ESCOM or whoever sometimes puts money via the asset managers, who can then put money in property. So you also a shareholder, investor indirectly through that, right? But that happens by nature of the fact that you are employed where you're employed, or you've got a life product that you have.
That's correct.
Now, deliberately, I decided that then, okay, fine, I want to now access those REITs, real estate investment trusts, or property listed funds that now they've got. Remember, I can't go directly to Old Mutual and invest in them. In their management business, unless there's, I don't know, maybe there's a BE transaction of some sort or whatever. But I want to access the direct returns of properties that actively build and manage and own and get returns for their shareholders. So one of the ways that and here is where really it's the 10,000 rands, it's the 500 rands per month. It's as minimum as you can make it. We take our bonuses and spend really lots of things on it. I mean, just go into a unit trust and put money. They've got property products on top of other products they've got equity products, they've got cash products, they've got bond products, but they specifically like your Stanleps, your Ellen Grays, your Coronations, and it's a whole lot of them. There's a whole lot of them.
That's right.
They will have products which are backed by property. And what they do with that product, they will then select a mixture of real estate investment trusts, and I'm just going to use 5 and say maybe they'll take that. They can take a Growth Point, a Redefine, a Fortress, a Delta. I'll even use a residential backed one like a Transcend, which is a newly listed on the main board,
right?
Which is, by the way, it's residential, and they've actually been performing well during the COVID. So it's possible. And it's really traditionally your institutions in South Africa hardly looked at residential. It's very much a new concept because so it's always been skewed towards non-residential, the industrial, retail, commercial. But as you can see that that challenge in those other sectors make you want to feel like you have to diversify. So let's say Kgaogelo Unit Trust. I've got the Unit Trust product. Really, it's like you're saying, it's a 500 rands per month or 200, depending on each unit trust may have a different structure, and you can put in a lump sum of 5,000 rands or 10,000, depending. You're just gonna have to look at the fund sheets to see. There is a cost. There's a management cost. But what they are trying to do is that they will try to beat the SA Property Index Fund, and I'll come back to that, right? So they're actually then, in summary, there are possibly about 3 ways to do it indirectly. So you can, first of all, you need to open a broker account as well as a securities trading account, or one of the two, or if they're combined. Sometimes they can be combined if you use the bank, for example. Because you need to trade on something, you can get a broker to do it on your behalf, or you can decide yourself to actively trade on it. And with that, I want to be very clear that people must understand that investing and trading are 2 different things. Trading can be short term. When you're investing in this REIT, take a long-term position. It's similar to how you had the 5-year or the 3-year. Don't think that next year I'm going to take my money out. Sit it out, because sometimes you need to help it to grow. Sometimes you may buy at a peak of a cycle without understanding it, and then it drops. It can come back up again, or in the middle, or whatever. So think about it long term. So after you've opened those, you can use a broker to say once in a while, oh, please buy that stock for me. There is a cost for them to do that. So there's an admin cost of opening their securities account. But then also you can use a broker oddly and say, actually, I want to buy into Redefine today. Tomorrow, or please advise me in terms of what's happening with the stocks. They also charge a fee. I think there's fees. One company said they charge, it ranges. I think for people, it can go from 0.8% to 1% of the assets under management for you. But anyway, when you go to the different people, they'll give you the fees. It's very transparent. And then what they try and do is that they try to outperform the index on the property sector that is sitting there. So the other third way is that you can, so the first way I said you can go through the broker to the unit trust. The second way is that you can just go directly and you buy shares or sell them directly on choosing, let's say, okay, today I like this fund, I like Transcend, I like whatever, I'm gonna buy more shares there and the likes. And then the third way is that you can you can buy into what they called property tracked indexes. So there's a South African property index, SAPI, they call it SAPI. There's an all property index, which includes everybody. And then, so what then happens there is that it also requires some minimum monthly fee or a lump sum, similar to what I said with the unit trust. But what they do is that say, for example, the property index fund that pulls together the top 20 biggest funds for you. So they just combine all that. So you diversify you don't have to put money into one company, but in that way you can start playing and getting returns from classes which maybe you would not be able to get into if you are developing or investing with your own money.
Let me just clarify. I know KG has given us 3 options, but my recommendation, please focus on the number 1 and number 3. I strongly suggest you don't invest directly, and say, buy that company. Rather focus on the unit trust or Puma index funds. It's better that way.
Because somebody's managing for you.
Somebody's managing it for you. Someone is taking a decision for you. and you don't have the expertise, unless you've analyzed the company, unless you've got that expertise, please, I don't recommend you do number two. Focus on the unit trust. You know, someone is going to take care of it, or you focus on the various indexes, you know, Satrix, property indexes, etc., etc. But again, if you have the expertise, it's a different story. Now, let me give you the last two.
Oh, questions. Sorry. Lastly,
yeah.
Sorry, before you move on,
there's
also lastly one important thing we forget, and like you did say that this is, you know, with Black people, more or less this is mostly for us. You do also have transactions where some of these listed companies, or even unlisted, they may look for Black-owned participation in the structure, because they also have to comply.
Right.
So, you know, I think sometimes we need to formulate ourselves. Get like somebody can say, oh, I'm looking for a woman-owned consortium. I'm gonna give them 10% of a stake in this company. Right. So those they also happen. Not like before, back when the listed fund was growing, and but they still do happen. So I think people must investigate such things as well, whether it's through, like I'm saying, it can be unlisted or it's listed, or even buying into a property manager, or buying into, because this is wealth building. Each service or company is about wealth, so you can play in that space of property, and by formulating yourself as businesswoman. So where you from, St. Pietermaritzburg ladies, can 5 of them can get together. They may be in different businesses, different sectors. One may be mining, one can be a doctor, one can be a teacher. Right. And then you sort of like, if you tick the boxes, yes, there might be some requirement for you to inject money in it, but then you go and try and get funding for it. Okay. So let's not forget that as well.
Yeah. Beautiful. Thanks a lot. KG, what is your view on property stokvels and crowdfunding? You know, someone else might say, you know, I want to be a property player. I already own unit trust. I already have retirement annuities. You know, I've got, I'm in on pension funds. I'm already investing on property indexes. It's not a problem, but I now want to get into the space, but I don't have enough funding. Is it a good idea that we look at crowdfunding? And what is your view on that?
Look, I mean, I think it's quite encouraging that these instruments are now, you know, property stokvels. I always had a bit of a problem with them, because I was like, what are we doing? We collect money each month and I'm gonna get it back. Where's the return? What's the point of, I could put it in a cash investment product with my bank, where I can get a 7% whatever if I've got the right minimum account. And what you're basically saying is that we know you're not good at saving money, so but one day you're gonna get the lump that you wanted by you doing this, but we're not really effectively using them to invest. And I'm not saying invest in property alone. There's other ways of putting that money for it to grow, such that when X gets it at her time, it's not what she puts in times 12, but there's a bit of a growth in it, because then they're investing. So I think it's a great idea that there is that, because, and then what they can do, property stokvels, is that you can buy a rental income producing investment, whether residential or whatever. You can buy to build and sell and flip, what they call making the profit from a development and on selling. You can also still buy shares in that unit trust as an organization, so you've got more money now to be able to put in there as a collective.
Right.
I know that also some people are like, no, we want to buy homes, you know, can we collectively have, I don't know, I still can't grasp how that works. But I think the important thing to know, then crowdfunding is also an interesting also model of doing it, because that uses online and all that. I'm also not sure how that's picking up in terms of internationally it was talked about, but I think it may have its nuances. But I think you must still be able to, for me, the discomfort I'll have with it is that I must trust that the person that's doing all this investing knows what they're doing.
Yeah.
And I must understand, and you know, before our traditional stock files, it was me and my neighbor and my cousin and my mother, and so we all knew each other, you know. Yes, there may have been a treasurer, stealing. Those happens anyway because it happens. You know? But here you trusting a stranger you don't know, who's saying, I'm gonna give you a return. So like I'm saying, why can't I put my money into something that's gonna turn it? And I'm trusting a stranger. Yeah. So there must be lots of transparency. There must be track record, in my view, from this person. Yeah. There must be constitutions. There must be a proper constitution of the company. That's right. Who votes, who are the trustees, where will my money go to? Where will it go invested? And how is that? The transparency has to be there. Yeah. Also, what is your responsibilities? What are regulations and the rules? Who are the other members I'm with? Because I don't know them. Because now it's open for people in the public. That's right. What happens when I can't continue? I can't pay. Because there's also those hidden things that you may not know, you know? And what is my contribution? And how am I gonna get my money out? You know, so I think I'm just a bit cautious that when I look at one and I'm like, but okay, what am I putting my money into? Because remember, and I'm coming from a industry sort of expert, sort of, I'm calling myself that. I suppose I can talk so highly of me. But the stock fell is for somebody who is not necessarily, because they want to have the opportunity to get there. So, but I think each person must go to somebody and say, I'm getting into this. What do you think I should be getting? I should be finding out, because I'm excited. I want to get in it, but this is just giving me minimum. And I think it can improve in terms of information and transparency going forward. But I'm glad that the opportunity is now growing and people are seeing it. So and then another last thing I must tell you is that there is also, not last thing because I'm going to come to the funders, there's also an interest in backroom investments in townships. And there is an institution this institution started being the institution that was funding mostly inner cities at the back of the degradation of inner cities. It's called the Trust for Urban Housing Finance, TURF. So now they've started a product where they're going to specifically look at how do we unlock back rooms in townships so that your mother can become an investor, and they want to invest in those products and give them the funding, because the banks are not going to give you funding for your back room. So that's a very exciting one. I think for our people, it's something that we must, and I'll send you the information of the company. That I mean, this company is also turned a guy who was a security. I mean, there's a story of a guy who was a caretaker of a building in the CBD where the owners went off to wherever they come from in Europe or Australia or wherever. Yeah. And the owner said to the guy, if you can get funding, the building is yours. Yeah. And TURF came through and helped this guy out. Wow. Imagine such a story. Now he's a landlord from being a caretaker. So there's some wonderful things out there, but I think information for our people information must come to our people, because I think it's fitting.
Can I interrupt you? Please get someone from TURF whom we can interview in the next, we'll fall for August, probably in September, that you can interview.
No problem. You've also got, there's also a place where it's quite big, and it gets government grants. Yeah, it's sort of a government grant where they then loan money, and that's the Gauteng Partnership Fund. Yeah. I wish they could expand it to other provinces. So they would basically mostly residential, and they go beyond the CBD. So they'll go to townships as well. So there's also another institution, and we can also give you somebody from there. Okay. And then you've got also what you called is the NHSC, stands for the National Housing Finance Corporation. Yeah. So they also provide some funding there on the housing side. And then, as I mentioned, is that government has got an instrument called the SHRA. It's the Social Housing Regulation Authority. Yes. And they've got a grant where they will take off a portion of the development cost, quite a large amount, and they target where people are building social housing for those with the minimum income.
Yeah.
Because they won't afford a 4,000 to 6,000 rental, but it's a subsidized type of rental as well.
That's right.
So they are there. People need to know.
Yeah. Well, we have no excuse. We've got all these institutions that are prepared to give you some level of assistance. Let's go out there and make it work and make it happen. You know, I was saying last week with Ipeleng that we need more Black property developers. We're the biggest consumers in the residential space. You know, everyone is doing a study. Everyone is analyzing the black market. Everyone is analyzing. We are called the Black Diamonds, but we are not in the space. We are not developing enough. You've got big players who are operating even in the gap housing space in Gauteng. I can mention about Cosmopolitan. You've got you know, a couple of new, you know, a couple of players who are really doing big developments, 10,000 units, etc., etc. But we're not finding Abandaba Miyama. We are encouraging you at home. You know, we are going to get an interview with the TEF, who are now going to be looking at the back rooms. How do you convert the land that you've got at home to a back room, 3 rooms, 6 rooms, 5 rooms, if you're not very far from the industrial area? That's a big opportunity. Or if you are closer to a TVET college or a university. So those are some of the opportunities that we've got. But we've got to own our space. We've got to see property as a wealth creation area. You've got to see property, and using those back rooms, you are now in a better position to say, well, I've got equity, but my equity is worth 400,000 rands. That's fine. Then, you know, that's your own contribution towards the bigger picture. It doesn't have to be millions. It starts with small, you know, a couple of 100,000 rands. Then you grow from there to a million, to a few millions, etc., etc. But don't expect it to happen overnight. It will take time. You've got to be patient and take your time. What is your final word, KJ? You've given us a lot of information. We're really grateful. What is your final word that you want to tell to our viewers?
I think our viewers is that there's also organizations in the industry which you can join to network, to learn. I mentioned the SIBIP. SIBIP is the South African Institute for Black Property Practitioners. Right. I'm a past president, so I must punch as well for membership. And we are national. KZN has got a chapter as well, as well as we start in Limpopo. Western Cape has got, Eastern Cape has got one, but we are reviving it. But the KZN is quite active, and I know most of your listeners are coming from that side. Yes. It's about 1,650 per year, and you can even pay it monthly, 165 per month. And there you really can have access to some of the programs, education. I mentioned there's a property entrepreneurship program. They also started a property management program. There will be online talks about funding. There's a conference each year, except this year because of convention each year, except because we can't gather this year. I mean, last year we were in Durban talking about, and I gave a similar presentation like I'm doing now at the convention. So people paid for it. You guys are not paying for it. But so it's, so you can network, you can meet professionals. They say you're going to develop, you can meet professionals, developers, because you need to, like I'm saying, you need to get to relationships. You need to know people. Because I've seen guys were like, no, I met a QS there and you know, it didn't really work out. I'm like, because you were just referred, I was like, no, go speak to somebody. And then when you get there, it's not such a pleasant experience. So you need to start being familiar with the industry and the players and who's in the value chain, because you will need to appoint somebody to help you if you want to get into this game, if you've never done it before. So I would encourage that you read up, you get in touch with some of us, you ask us to refer, and you engage with it.
Fantastic. Thanks a lot, KJ. May God really bless you, bless everything that you touch, bless your family, bless your businesses, bless even the ones that you've got, the future ones. We speak a blessing upon everything, Oyenzayo. Next week, Mlaleli, we are going to be hosting Uwendi Dlomo. She is going to be speaking. She owns CTM. You know, she's got 2 branches. She owns 2 branches of CTM, the building materials company. So we're getting into at an operational level. And she also owns a number of properties in terms of what is called hospitality apartments. I think you call them holiday apartments. She owns holiday apartments, a Hilton, holiday apartments, quite a number of, I think they like 50 or 60. So we're going to be speaking to her, getting into the building material space first, and then getting into those holiday apartments. You know, how did she make it? She must share. She will, that's why we bring people here, so that they share their experience. But KJ, God bless you, that way too. You gave us a lot more than what we expected. May the good Lord be with you and your family. Amen.
Thank you very much. Amen. And to you
Thanks
too.
a lot. Thank you.
Thanks. Have a good weekend.